Casey's General Stores Inc., NASDAQ, Casey, stock rose 6.48%, as on December 7, 11 hours 33 minutes and 29 seconds AM UTC-4. Source: Google Finance, after the company posted mixed results for the second quarter of FY23. Inside, same-store sales increased 7.9% compared to prior year, and 14.4% on a two-year stack basis, with an inside margin of 39.8%. Total inside gross profit increased 8.9% to $504.5 million compared to the prior year. Same-store fuel gallons were up 0.3% compared to prior year with a fuel margin of 40.5 cents per gallon. Total fuel gross profit increased 22.7% to $284.4 million compared to the prior year. Same-store operating expense excluding credit card fees were up 1.3%, favorably impacted by a 3% reduction in same-store labor hours. At October 31, 2022, the company had approximately $884 million in available liquidity, consisting of approximately $415 million in cash and cash equivalents on hand and $469 million in undrawn borrowing capacity on existing lines of credit. Casey in the second quarter of FY23 has reported the adjusted earnings per share of $3.67, beating the analysts' estimates for the adjusted earnings per share of $3.27. The company had reported the adjusted revenue of $3.98 billion in the second quarter of FY23, missing the analysts' estimates for revenue of $4.15 billion. Moreover, total inside sales were up 11.4% for the quarter, driven by strong performance in prepared food items including both pizza slices and whole pies, as well as non-alcoholic and alcoholic beverages, snacks and candy from the grocery and general merchandise category. Inside margin was down 90 basis points compared to the same quarter a year ago. Grocery and general merchandise margin was consistent with the prior year, while higher prepared food and dispensed beverage ingredient costs, notably cheese, partially offset by price adjustments, continued to pressure gross profit margin relative to the prior year. The company now expects same-store inside sales to be approximately 5% to 7%. Total operating expense increase is expected to be near the low end of the annual range, which was approximately 9% to 10%. The tax rate is now expected to be between approximately 24% and 25% for the year. The company is not updating its outlook for the following metrics. Inside margin is expected to be approximately 40%. The company expects same-store fuel gallons to be flat to 2% higher.